All right. What's going on, everybody? Let me turn this music down a little bit, or a lot of bit, and let's get into it. So we are on episode 20. 20 nights in a row. 20 nights in a row, ladies and gentlemen. So what we're going to do today, and how's everybody doing? How is everybody doing? What we're going to do today is some multiple time frame confirmations, all right? And before I really get into this, guys, if y'all haven't, gave us a like, sub, show your friends this, because, guys, we're going to be going on a run every night, providing content, everything you can think of, psychology, risk management's coming in here soon. We're going to start doing indicator series. Every other night we're analyzing the market. right? So make sure you're coming on here, checking it out. This is a place for all the traders to come hang out. I got the chat open over here. What up, bro? This is my homie AB. He's out here too as well right now. So I'm holding it down tonight by myself, but AB he's taking care of some business right now. He's usually on here with me, right? So also, before I get started, if y'all want to check out more of what we really provide and what we really do, this is what we do for free on YouTube. But what we really provide is mentorship, okay? So go to tradethenextwave.com and go to the plans and pricing. Check out if this is something for you, but we offer pretty much everything. Once you get a membership, you'll get access to the educational platform. And inside the educational platform, you do get a whole series on what I'm about to break down. Multiple time frame analysis. And this is inside the advanced technical analysis course. Okay. This is definitely something if you're like a 1 or 2 year trader where you've learned a whole lot, but you just want or need to know more. You're that type of trader where it could all work, but you need to know why it's working. This right here is a big, big help for a lot of traders. And then, of course, we have psychology, risk management, the magic keys, right? So we got everything in here. Go check that out. If that's something for you, I would love to help you with your trading. I like to help people really is what I would say I'm best at is seeing what your strategy is and being able to tweak it to make it fit you better. Because a lot of people think they have the best strategy in the world, yada, yada, yada. But really, after you've been in the market for 5 years, you kind of understand more of the psychology of the trader, and then you're able to kind of tweak it to help their psychology. And then, of course, the technicals are the technicals. Everyone's strategy is going to be a little different, right, guys? So without further ado, let's get into it. So multiple time frame confirmations. What does that even mean? Because some people might not even know what that is, right? So when you have a trade idea, most people are looking at it on one time frame. And it's usually not the weekly. Okay, it's usually like the 15-minute or the 1 hour. If you're scalping, you're going into the 5-minute. And if you're swing trading, you're probably looking at the 4 hour or daily. But what I want to start introducing is the idea of the higher time frames lining up with your lower time frames to give you a higher win rate. So that's what this is all about. You're going to be able to find trades all day long on these charts. I'm talking every single day. All you have to do is go to a lower time frame and you'll find a trade, right? But to have a high probability that that trade is going to be a winner, that's a different story, okay? So what we're going to do, I'm going to remove these indicators today, and we're going to talk about mainly structure and levels and areas. I don't want to get too deep into the volume profile. I don't want to get too deep into divergence or anything like that, right? So let's hold up. I meant to do this and get that out of here. All right, so and I just made this whole thing white, didn't I? Hold up. I can't be messing up my screens that much. Sorry about that. Let's get back to business. Okay, so multiple time frame confirmation. Let's get into this. All right, so we can really use what we just saw on the dollar if we want to, or we can go back a couple of weeks what we saw on the dollar. The dollar is a good example on multiple time frames. Not this dollar because it's not giving us enough price action. So let's see if the futures chart gives us more, and it does. Okay, perfect. So let's delete everything we got on here and let's look at this. So it doesn't matter if you like Fibonacci or not. This from this swing high to swing low, and let's drag it out over here, and it's white, so let's make it in. All right, the market came into the 78.6 on the higher time frame. You don't like Fibonacci? Okay, it came into this supply area right here where the market struggled before, broke through with major supply, came right into it. Perfect. That's check number one. So on the weekly time frame, and if you know us, we were waiting for the market to get into this area. Once the market did get into this area and it started to throw this type of price action on the weekly, because you don't just get in right on the weekly candle. Let's talk about this. Here's this weekly candle, and we'll throw like just a line right here on it, and we'll go into this week on the daily, right? So here was that weekly candle. If you would have just sold straight off that, I mean, maybe if you caught this daily candle right here, you had a little bit of success. But look what happens here. We wait for, let's put this back. We wait for this structure to shift, and then there's a humongous shift to the downside. It fails to break highs in an area of importance on the higher time frames. Okay, now let's go into the lower time frames. So the daily's struggling to break highs. What did we get on the 4 hour? On the 4 hour, the market was right here struggling to break highs. Okay, this first one, and then once it makes this low here, you just bring out your fib tool. Boom. Comes right into the 78.6, right into a trend line, right at whatever strategy you want to use. Okay, the market failed to make a new high. Then it made a new low. Okay, that's the definition of a structure shift. So when the market pulls back, look for a move to the downside. Everything was picture perfect right here. It was in a higher time frame weekly zone. The daily was not making new highs. And on the 4 hour, there was a shift here. So that was multiple time frames right there for a swing trader to really get into that market. Now, when we go on to the lower time frame to try to find a sniper, and if you are not using multiple time frames and you're trying to get a sniper entry, it's not going to happen. So let's go into, this area right here onto, let's say, the 1 hour first. And why would anyone take a trade right here? Let's talk about this. Besides, it hit the fib level because the market was going up right here. And so on a lower time frame, this is looking kind of bullish, right? Besides it hit a fib level, besides it hit a trend line, which let's just delete those. I mean, whatever. It's in this weekly area as well. So there's a couple of reasons. There was this area where the market was in agreement, and then it fell out of imbalanced. So when the market comes back to these areas of agreement, it's a really good confirmation, just straight up price action confirmation. If we were to add an indicator like the RSI or a, let's just say some type of momentum indicator here, let's see if there was any type of divergence. Nope. So here the market was kind of making this higher high, and then it made another high. So that would have been a tough move on the 1 hour to trade off of, unless you just had a limit order waiting because you see the structure shift. Let's go to the 15-minute and see if that was playable on the 15-minute. And perfect. So we know that maybe on the 1 hour, it wasn't quite ready, but on the daily, weekly, 4 hour, it's ready. So, I mean, you're definitely justified to take the trade, but look at what we have right here. On the 15-minute, we're getting this move up, and then we get this impulse down and a slow retracement. On the 15-minute, it hits the 78.6 just barely, and these 78.6s line up to make this zone right there, and that's where the market stops. So we have the higher time frame fib lining up with the lower time frame fib, and look what it does. It comes here, rejects, and makes the biggest move to the downside, hitting this target easily. So that's how you can really, and I'm just picking a random example. We'll find another random example, but that was, I guess, a really good one. How you can line up all the time frames, and then once that lower time frame lines up with it, you really get the move that you're looking for. You could have gone onto the 5 minute to look at that, as well, as the structure really was more of a 5 minute shift right there, based off of, you know, how it didn't really shift structure on the 5 minute. It was a nice impulse down, but not really a shift in structure. Let's go into the 5 to look at it. I don't think it'll let me go back that far, actually. So let's look at another pair, another time, another everything. Just randomly gold. Okay. And it's actually funny because gold. Okay, let's get that out of here. And let me make sure I don't have any comments. There we go. All right. So on the 4 hour, actually, let's start on the weekly like we just did. Same thing. It was in a macro swing area right before it hits that 78.6. Okay, so waiting for it to get up there, right into this area of supply. Right as it gets into this, we get a big shift to the downside. So how could we have possibly caught this move? This one would have been a little tough, but it was definitely showing that sign. So I don't really use the RSI. So I like to use what's called the MACD. And I kind of do this. So here's a little scoop if anyone's interested in how I modify my MACD settings. So I use a 10, 3, 16. And then I take the histogram off and I move the MACD to the histogram. So it's just a little different. I like to make this a little darker. And that's my MACD. Okay. So what we were seeing on, let's see here. This is interesting. Why is it inverted? It seemed like it was inverted. Now it's not. Anyway, we have this doing this. Yeah, this is interesting. This MACD is wrong for some reason because the negative's on top. That is weird. Let me see what my... Yeah, that's normal. Okay, we'll just do that. And then I'll remove this guy. Okay. Up into the area, we had the divergence. So that was number one. It misses the fib, right? So that would have been a hard area to catch on the daily. But then once you see this bearish engulfing candle right here, you kind of already know what's about to happen. So let's go to the 4 hour. And it was a really big fake out. So we have, and I'm going to need to keep removing these off. We had a fake out here and then just instant drop back down. And then another break of structure here. And so now we know that gold is bearish on the, not just the lower time frames, but even the higher time frames. It's possible that this could start to shift bearish. So if gold comes back into this area where it was in agreement, we're going to look for a move to the downside. Very simple. Let's go and look at it from another area. Let's just see what this was going on down here. Okay. Let's go to the weekly and expand to the left and take these guys off. So on the weekly, what was happening on gold right here. So this one really didn't have a good setup on the weekly yet, but let's see if the lower time frames were going to give some opportunity. If you were looking for buys as it made a rejection, how could you have had lower time frame confirmation? That's kind of the trick. So let's go to the daily. And every single time it came into here, volume is good on all these bullish candles, but we have this bullish reversal, bullish reversal, bullish reversal. So you definitely could have had a pretty good bias on the bulls step in every time it gets here. If you were being super patient, you could have waited for this to break and then gone to the lower time frame to play a little baby break and retest, or you could have played the Wyckoff. Let's go to the 4 hour. And almost every time at the bottom of a market, there's going to be some type of divergence, just so everyone knows. So the momentum usually will be creeping up as the market is either making lower lows or flattening. But this was a nice example as well. And even on the area where it made this impulse up, it would have been a little scary as it came almost to like an area where it would probably take stop losses. But as it was making this low down here, you can see the momentum was coming up. And that's a really good sign that it's about to reverse. Then it did make this impulse up, retraced, and then made another impulse up. A big, deep retrace, and then it just started to take off. And so on the weekly, you came into an area where it's rejected. And on the 4 hour, we had the divergence come in. The market shifts. You should be looking for buys. It comes back into the demand area. Market shifts again. Good confirmation. If you go into the 1 hour in this area, this is the kind of the plays that we would probably be looking at. Once it impulses, that's when we bring out our fibs. So it impulses, breaks structure, comes, barely misses the 78.6, but that would have been like the opportunity there. On this impulse, just completely misses the fib. When you're looking at the volume profile, which we're not, this area right here has no volume in between. So when it breaks that area, this is kind of like the Wyckoff accumulation, and it breaks through, chops, breaks through again. Those are just easy areas that you should be able to buy from, having that higher time frame confirmation that it could possibly go up from there. Let's go into another pair. Let's see if we got anything in the chat. Nope, we're good. Let's go to Bitcoin, right? Let's see if we could have had a bias on Bitcoin at any point in the past where it gave us some good indication. Let's go to the weekly. And we will go into this level. Let's see where the bottom of the market was last time it made a big rally. All right, it was over here. Let's talk about this one. Okay. So Bitcoin was making lower lows after it made this big run up in 2017. 2018 bear market, 2019 started off slow, and then in March or April it started getting hot, and it got real hot. Okay, so how would someone maybe have been able to catch anything right here? Okay, well, this is kind of a scenario that I think we might be seeing right now. I don't know. You never know, but you got probabilities. That's all you can play with. So this move right here, I'll tell you this. It was pretty much, I don't want to say a 78.6, but it was even deeper. It was like 80% correction. So you had an 83% fib, 84% correction. That's basically what that means. And so it was deep correction, due for somewhat of a move up. Regardless if it was going to make all-time highs or not, it was due for somewhat of a correction. It gave good volume off this bullish candle. So let's go into the daily over here. Oh, dang, I got this chart everywhere. Okay, so on the daily, and I almost remember this in real life because this is when I started buying Bitcoin, 2018, and had no idea what I was doing. I remember that too. This pattern happens and it just tanked. The market just tanked, kept tanking, and then it made this move here. When it did that, the momentum started to pull up on the daily. Okay, so the momentum divergence here, and then we got this volume push up. So that's one thing to note. So once we get an impulse, you can fib that, and it came right into the 78.6. Once it hit the 78.6 on the daily, made a nice impulse. So let's go into the 4 hour and look at this. Let's see, where are we? 2002, 2002. Here we go. So a lot of higher time frame confirmations that the market could move up from here. Was there divergence when the market came? So we know there was divergence on the daily when this happened, and it was there on the 4 hour as well. But here is where, you know, the entry for another, or not another entry confirmation, but, you know, to stack all these up on top of each other. And, you know, we had this low, and then it made a lower low, another lower low, lower low, but momentum was not having that. So pretty clear indication right here in this area that the momentum was slowing down into an area where there was big demand. On the daily time frame, we know that there was this divergence as well. So very good confirmation at the bottom of the market with Bitcoin. Then you get this beautiful ABC pattern, which does not happen a lot. So here, A, B, C, and then it took off. Let's change that color. Okay. And then we make this move to the upside, and it never really returns for a long time. So to catch, if you didn't, you know, go ahead and place a trade right here, it made a nice bull flag here. Never came to the 78.6, but just a very clean bullish move. You should know this high, when it breaks, it's going to make another leg up. Made very similar move here, and once it broke here, and then it even gave one more move up. But once that happened, the divergence started to sit in, and that could have been a good area to take profit, but then ultimately, not really, right? So, you know, lower time frame, everything was working out. A lot of times, guys, when you see these ABC patterns, it's really a bigger harmonic pattern inside of it. So just keep that in mind as well. This is, I think, a Gartley, but I don't really care for harmonics too much, but I do kind of care for the Elliott wave and the time and price. But yeah, this is kind of what we're seeing right now, possibly. Let's come over here on Bitcoin, where we're in the bottom of this market, okay? And it did kind of shake these lows out with this move, And now if we do make this type of correction, which I think we're going to, if we do kind of correct down into this level here, and you can see there's not a lot of volume below here. So in between here, if the market does get to the 61.8, it'd be like you can stack here and stack here, but don't try to stack in between probably. So this could be somewhat of an area like that. I would like to see it do this. Let's get so we have this move, and now I'd like to see it kind of do maybe something like this, and then ultimately this. Very similar pattern. And if it does give us this look right here, then that's a really bullish signal. And really you could draw it however you want to. I usually just use swing lows. But if we get that type of look on Bitcoin, it's very similar to what we have seen in the past, guys. So kind of like a big sweep down, kind of break the lows. Sorry. 1 second. Break the lows and then impulse out. It's kind of the same situation here. Do we have bullish divergence coming off this move here? Bullish divergence coming off this move here, and then we get the impulse. So yeah, it's looking similar. Let's measure these impulses. I'll just go from very bottom to top. Oh, wow, that's on. That's weird. Okay, 56% move up. I'm just over here analyzing now like crazy. And let's see, what did this do? Only a 35%. So we even got a stronger move up. That's interesting. Something definitely to note and to look for. Higher time frame confirmations, or even these scalps. Let's talk about scalping. Let's go to like EU, or let's go to, let's say, I don't know. People love GJ, so let's go to GJ. Okay, so a pair like GJ, right? People love scalping it. How can you use multiple time frame analysis on GJ? Well, let's see. Let's go here. The market has, let's just go way back, because I don't really want to look at what I'm looking at. Let's just go way back here. It's not going to let me go lower time frame, so let's just stay where we are. Sorry. Okay. Market here is starting to look bearish. So here's how I like to scalp most of the time. When I see a market that's looking bearish, however you want to draw it, currently it's starting to go sideways. So if a market is bearish and it's starting to go sideways, I really want to look for sells at the top and buys at the bottom. Pretty easy, right? But mainly I want to focus on the bears because it is bearish on a higher time frame. So to me, the scalps are going to come quicker than this short scalps are going to come quicker than a bullish scalp, and the probability is a little higher. So once you assess, okay, we're in a bear market downtrend, let's go into the 1 hour and see, how you could have maybe assessed it a little even deeper, and then we're going to go into like the 15 and 5 minute for a scalp. Okay. So the market has made this move here. It has made this move here. And now it's coming back up into here and back into here. Okay, at this point, you can kind of judge that it is sideways. Correct? Correct. If it comes back into here, you should not necessarily just expect it to break. You should pretty much expect it to hold. So how can we get a trade off of it? Okay, market comes back into here right on this level because we're bearish on the 4 hour. We probably would not look for a short just yet. Okay, this is very bullish. So let's wait. Okay, it does drop. Great. We could have had a trade. Let's wait for it to get back up here. Okay, perfect. It's back in our area. Now what? Well, on the 1 hour, the momentum is dropping. Perfect. There's divergence. So in really the momentum is really dropping as these waves are coming up higher, higher, and higher. So how can we work with that? Let's go down to the 15-minute now. And we're up in here. And we're waiting for basically just a shift in structure is what I like to wait for. Of course, if you're a pattern trader, this would have been a good one for you right here with this rising wedge. And you could have sold at the top, right at resistance, right in supply. You could have had a bias, pattern traders, they pre-break out the trade. So they kind of predict when the breakout is going to happen. So that would have been a clean one on a 15-minute time frame. Nice little scalp back down. But if you wanted to wait like a 5-minute really high probability scalp, you would definitely want to wait for something to break, at least this level to break. So once that level breaks, now you have a clean bias on the 5-minute. Because other than that, it's looking kind of bullish since way down here, since the 23rd. Now we're all the way up in, is that 1 day for real? 13th. Oh, I said the 23rd. And now the 20. That's hilarious. So this is the 13th, and this is the 23rd. So a long time it's been bullish, hasn't really shifted that structure yet. And so you really want to just wait for that structure, even though it's in the area you want to sell from. But here we go. It stops making new highs. Okay, the momentum slows down, and then boom, you get that big snap in momentum. Then all it is kind of finding your little order block or your little fib or your little area of volume, or however you want to enter the market. On the lower time frame, you have the bias. Okay, we just broke structure with an impulse. When it corrects, we're looking for the market to drop. It corrects, you get a drop. It comes back up, you get another drop. Okay, really the drop you wanted was right here probably. But either way, we get the retest, drop. Right? And that's like an intraday move. Everyone would be happy with this move if you caught this. That's 130 pips. If you catch that on the 5-minute, you're killing it. Even if you catch this move, it's like 80 pips on the 5-minute. So that's just a really good way of using multiple time frames, having high confirmation, waiting for it to happen, and then being able to get into the market and take advantage of that. Let's do some more. Let's go into the indices. Let's look at it doesn't matter. US 30 is fine. Let's go to the weekly. Okay. And let's see, does it have much data for us on the weekly? Probably not. So we can talk scalps. Let's go into here, kind of daily 4 hour. We can break it all the way down from the daily when you're scalping too. It's no big deal. All right, so here's the thing. The market is making this low. We get this move up. And really when you're looking at high probability, anything, you don't get the opportunities all the time. But here the market makes a double bottom, and then it breaks here. So at this point, you're looking bullish. So anything above this arrow on the lower time frames, you should have a bullish bias. Let's go into the 1 hour. So we get this break of structure. We're very bullish on everything. Every single time the market pulled back, it made a new high. Every single time. I don't even need to go into the 15-minute to show y'all how many different opportunities it could have had to buy the market on lower time frames right there. Okay, here's a little area where you get chopped up a little bit on the lower time frame sometimes. But you got to know that the major structure points, they didn't necessarily break, fake out. So when you are on the lower time frame scalping, you always need to come out, zoom out into the higher time frame and see where the major structure points are. Not these little spots right here. This is just a contraction pullback for it to continue up, right? Let's go on to the 15-minute and just look and see what we got kind of right here. Market was going up that whole time. Finally, once it breaks this structure, then it makes the move to the downside. Everyone was probably thinking, oh, it's coming down here. Oh, it's coming down here. Oh, it's coming down here. But it never quite broke structure until once it broke, then it really broke. It even gave a pullback and a couple bearish entries here. Now it's starting to go sideways. So what would we do now? Let's get all this off the screen. Now that it's sideways, what are we going to do now? We're basically waiting for it to break either side. It's most likely going to follow the area of volume, or since we're in an area on the weekly time frame, kind of a macro area coming off the 61.8, and on the daily, the market is starting to go very sideways. It's starting to coil on the daily, so it's either going to go one or two ways. It's either going to break out to the upside or the downside. Some people think that's a complete bearish pattern. I think it is kind of just whatever. It's either way. When a market coils, it just means the volatility is tightening up. But this is what I'm seeing. We had one big bearish impulse. The market came into the 78.6 and it made another bearish impulse. So I'll take this fib and I'll bring it over here now. We're struggling to break out of this high, holding underneath this fib level. When I go onto the 1 hour, I see a really nice opportunity here on this fib level. Now, even though the market didn't break structure completely, I like the impulse, and this is what I'm talking about. This impulse here, completely different than all the other impulses in the MACD here. So to me, after we had the divergence and the momentum, we get the big move down. This is like a lower time frame lining up with the higher time frame possibility that this could happen next week. And so that's what I'll be looking for next week on US 30, with that higher time frame mixing up with the lower time frame. And when it gets into here, when we get on the 5-minute time frame, what we'll really want to see is, and we're already seeing it, the momentum slow down. So the momentum is still slowing down as it gets there. It'll happen Monday most likely, maybe even Sunday. Then that's an opportunity to take this to the downside with other time frames confirming. And that's kind of really how I trade. I wait for at least 3 time frames to confirm for a higher probability setup. But that's it for tonight. Y'all have a good one. Peace.